Great. Good afternoon, everyone. I'm Debbie Lucas, the director of the MIT CFP and a professor of finance at MIT Sloan. On behalf of the center, I'm very happy today to welcome Barney Frank. We're very excited to have him. Actually, what's going to happen is we're going to introduce him in just a second, but while I have you all here, I just want to take 1 second of your time to tell you a little bit about the Center for Finance and Policy. Our mission is to serve as a catalyst for innovative, cross-disciplinary, and nonpartisan research and educational initiatives that address the unique challenges facing governments in their role as financial institutions and also as regulators of the financial system. So having an event like this today is squarely in our mission, and we're very excited about it. I don't want to take much of your time now, but I want to invite you to look at our website. We have a lot of interesting initiatives going on for those of you with an interest in finance and policy, and I'd like to encourage you all to become involved if you'd like to. So let me now introduce Doug Cristatello. He's the executive director of the MIT Center for Finance and Policy, and he's going to introduce Barney Frank.
Hey, yeah. All right. We got a great afternoon planned for you all here. We'll get you out of here in about an hour. I want you, as we begin, to have our conversation with Congressman Frank, please think of questions, because we're going to be calling on you near the end of the event. So, as Debbie said, the role of the Center for Finance and Policy is to inform and educate with a goal of improving the quality of public policy decisions and debate that are reached here in the United States and globally. Today we have Congressman Barney Frank here to chat with us, and to me, he is the personification of the spirit of the CFP that has really helped to inform the debate in Washington, most recently during the darkest days of the 08-09 financial crisis. It was a time of great peril, as many of you know. Complex legislation was being developed and directly influenced by the committee that he chaired, the House Financial Services Committee, to address a surge in foreclosures, the near demise of Fannie Mae and Freddie Mac, severe systemic risk affecting financial institutions across the country and around the world. He held numerous hearings, which I found to be incredibly illuminating about what we were up against, and even after the crisis, the root causes of the problem, authored really a number of the cornerstone responses to the financial crisis, including the Housing Economic Recovery Act and the Dodd-Frank Act shortly after the financial crisis. His bio is online. I guess this is the point in the intro where most folks read the bio. I'd encourage you to look at our website. We have it there. You can find it readily. I don't want to be reductive. I don't want to point to just one or two things that he's done. He's accomplished so much in 4 or 5 decades in public service. It truly is stunning. In my view, he's been that constant voice of informed and honest opinion. To me, he's someone that never pandered and really always got it right. So with that, I'm going to kick it off with the first question. And I think I'll go back to my seat to do this. So let's give Congressman Frank a round of applause as we get started.
Thank you.
So my first question goes, we have a lot of young folks here who are starting out in their career, and you've had a very interesting and diverse career. I was wondering if you could provide some insights about early decisions that you made that got you on the path that you ultimately found yourself. You started here in Cambridge at Harvard. You know, it's a bit unsettling for a lot of our students in the audience about where they go when they get out of here. Do you have any thoughts about your early days and how, and that path? Was it the right path to get on?
The first thing I should tell people is that I made a decision when I was 22, and then another when I was 27, and another when I was 32, and then another when I was 40. And it wasn't until the last one, and actually when I made the decision at 40, I thought that was short term. It wasn't until I was 42 in 1982 that I was pretty sure I would be doing something indefinitely. So that's the first thing to say is no one should think that any early decision is irrevocable. And in my case, I made a number of decisions reactive. I think there was this myth that you can, particularly if you're going to be someone who's politically successful, that you at an early age create your career. Senator Ed Markey once approached former Speaker Tip O'Neill, legendary, legitimately, deservedly legendary figure. Markey was feeling bad because he had gotten to Congress at the age of 30 because a good friend of O'Neill's, who was then 60, Torbert McDonald, had died of cirrhosis. And Eddie was abashed because here he was celebrating, but it was caused by the death of this man who'd been John Kennedy's college roommate. And he said to Tip, you know, I kind of feel badly that I got here because of, you know, what happened to Torby. And O'Neill said, Edward, you have entered a profession in which you get ahead because of the death, defeat, or disgrace of one of your colleagues. Outside events cause it. I will tell you, I said I made a decision when I was 40. The decision when I was 40, I'd been in the state legislature. I had assumed that I was going to be leaving politics because, well, let me go back a step. One of the most important decisions I made was pre-career. It was how to deal with my being gay. I realized I was gay in 1953. At that time, and for many years thereafter, the notion that you could challenge homophobia was equivalent to thinking you could repeal gravity. It was just a fact of life at that point that you accepted and lived with and figured out how you would accommodate. And so I went on, and I was always interested in politics. As an undergraduate, I made the decision not to go to law school, but to become an academic. And I applied to graduate school for a PhD program. And that was partly because I enjoyed politics very much, and this was a way to spend my time reading about it. And it also seemed to me that the academy was the best possible place to hide my sexual orientation. This is in the early 60s when I decided to do this. And I also had this interest in politics, but I followed the model then in the Kennedy administration. When John Kennedy got elected president in 1960, I graduated in 1962 after taking a year off. By the time I was ready to decide which graduate school to apply to, Kennedy had set the pattern of bringing people from universities to have important government jobs. Jerome Wiesner from MIT, John Kenneth Galbraith, Arthur Schlesinger, McGeorge Bundy. So there was this career path that appealed to me. I'll be a closeted gay man. I'll be able to hide out in the academy, which is more protective of difference than most other places. And I had the model of unmarried members of the faculty. People were not very many of them out then, if they could help it. And I would be able, at that point, to go and work for some other politician for maybe a 2 or 3 year stint and get out before anybody kind of figured it out. You know, after a while, there's a pattern. You're not seen with any women, et cetera. And that's what I thought I would do. And I was working on that when I got a call to see if I would go to work for the mayor, a candidate for the mayor of Boston, who was a liberal guy running against a terrible racist, a woman named Louise Day Hicks. So I did that, figuring, okay, I'll do this for a month and I'll go back to writing my thesis. At the end of the month, his name was Kevin White, said to me, well, I want you to stick with me. And I said, oh, I can't, I gotta go back and finish my thesis, which I actually hadn't started. But He said, no, I'll get you a leave of absence. He got me a leave of absence, an extension on my 5 years, from the chairman of the Harvard Government Department, who was his next-door neighbor, Professor Sam Huntington, and Huntington's wife worked for him. So that, a little politics in Boston goes a long way. So I went to work for him, and after 3 years, I went back to the Institute of Politics at Harvard. I was going to go back to my thesis. And I then made a discovery about myself. And it's the one piece of advice I will give you, career advice. First of all, don't think about a career in which you are forcing yourself to do something you don't really enjoy because you think it's the thing you want to do. You cannot live holding a gun to your own head. I mean, it sometimes works. I don't know if you saw Blazing Saddles, but at one point, to escape a mob, the star holds a gun to his own head and backs away, saying, "Don't move or I'll shoot." But I made a discovery about myself, and if you're lucky, you go to work where you have some talent and you stay away from areas where you have a defect. I have a characteristic that is a great defect in a scholar and almost a necessity for a legislator or someone in an executive position with across-the-board responsibilities. I have a short attention span. That made it hard to write a thesis. But as a member of Congress, as a mayor's executive assistant, if I had 2 hours to work on any one issue, that was a luxury. More often, there would be 3 or 4 within the space of a couple of hours. So I decided I would go back, I would go into politics, again, though, as an appointed official. And then friends of mine suggested that I run for the state legislature in Massachusetts in a very unusual district. This is 1972. Boston at that point was a very parochial city. Elected officials were either Irish or Italian, a small number were black because of redistricting. Almost everybody in elected office in Boston was representing an area within a few miles of where he or she was born. I was from New Jersey, I'm Jewish, I'm a closeted gay man, I don't fit the normal profile. But there was one area where I could win, the Back Bay and Beacon Hill of Boston, downtown Boston, very unusual. So I ran there. And then I made this critical decision that I would remain closeted because even in 1972, it was after Stonewall, we were beginning to talk about gay rights. But I couldn't get elected if I was out. But I would be an advocate for gay rights. That is, I find contemptible those who conceal their own homosexuality and then join in making life difficult for others. My line was that there was a right to privacy, but not hypocrisy. Right. So in 1972, I introduced the first gay rights bill in Massachusetts history. Also, given the luxury of the district I represented, the first bill to legalize marijuana. So society is taking a while to catch up to me, but it's getting there. At any rate, I served in the legislature, but I figured, you know what, politics is a chancy business. I can't count on doing this forever, and I didn't want to be a legislator whose livelihood depended on staying in office, because then you become a prisoner of electoral fears. So I went to law school. I went to law school to have a fallback in case I decided not to run again. In fact, I figured I probably wouldn't run again. And again, I've been elected in an unusual district, so I didn't think I could get elected in a broader constituency. And it did seem to me I might be electable to Congress, because at that point it included the Back Bay and Beacon Hill and Brighton and Cambridge and Somerville, and that was beginning to kind of liberalize some. But the congressman at the time was Tip O'Neill, and I was delighted that he was there. I was a great supporter. The notion of running against him was nonsensical. So I prepared to serve one more term in the legislature in 1980, retire, practice law with my new law degree, and be a leading advocate for gay rights, as we then called it, because I would have been one of the highest ranking, openly elected gay people. I would have come out in my last couple of years, and that was it. And now I'm 40 years old, and I've been making these decisions. And then, I guess from the heavens came a decision that led to another decision by me, and it was that I made the decision to run for Congress. And the man who made that decision is probably the unlikeliest person to have decided to do something that would make me a member of Congress for the next 32 years. It was Pope John Paul II. The congressman from the district next to mine was the former law school dean of Boston College, Robert Drinan, who had got elected, a Catholic Jesuit priest, as a member of Congress as an anti-war candidate in the primary in 1970. And he was very liberal, too liberal for a lot of the conservative American Catholics. When John Paul II came in, they went to him and said, you've got this big liberal in there, and we can't do what we need to do as long as they got a collar voting against us. So the Pope ordered Drinan not to run again. And that created the vacancy for me. I lived a mile away. I had become, kind of by a process of elimination, one of the leading liberals in the state. And I say process of elimination. The 70s were kind of there was a conservative turn. And most of my friends who thought about running for higher office kind of pulled in their horns. I was in a situation where I thought I couldn't win and couldn't lose. That is, I couldn't lose the seat I had, but I couldn't go any further. So I kind of stayed with liberal principles. Unexpectedly then, this district opens up, which was also a pretty liberal district, not as liberal as the one I was in, at Newton and Brookline. And so I ran for Congress, and that's how it happened. It was partly sort of taking advantage of opportunities, but in no case, working for the mayor, running for the legislature, did I create. I ran for the legislature. Oh, and by the way, there was one thing that helped me get elected to the legislature. The seat I ran in had been Republican forever, since the Civil War, the Back Bay and Beacon Hill. And there was a liberal Republican who held the seat in 1972. But I ran, and there were two things that helped me. There were a lot of students who lived there. MIT fraternity houses, BU fraternity houses, people who were at colleges in the area. Emerson was there and some others. That was the first year of the 18-year-old vote, 1972. Now, that didn't mean much because most 18, 19, 20-year-olds didn't vote in that area. They may have voted at home, or, as most 18 and 19-year-olds still do, don't vote at all. But it was also the year of George McGovern. And it became clear to me that now there was going to be a couple of thousand new voters in the part of the district where there was rarely much of a turnout because of George McGovern. And so I adapted an old joke. Friends of mine, we were working with McGovern. My sister was running his Massachusetts campaign. There's an old joke about a name dropper. And the punchline is that to prove to his skeptical friends that he knows everybody, he appears on the balcony of the Vatican with the Pope. It was an old Jewish joke up in the Catskills. And the punchline is that his friend who was skeptical is standing there in St. Peter's Square when his friend appears with the Pope up on the balcony, and he hears one Italian say to another, "Who's that up there with Goldberg?" So, figuring that people hadn't heard that joke, it was old by 1972, I had my photograph taken with George McGovern, who was a great man and accommodated me, and the headline was, "Who's that guy with Barney Frank?" And then I listed my program for gay rights and marijuana, et cetera, and that also helped me win.
Wow. That is terrific.
I had the gummy last point, too long an answer, but
No.
When McGovern, a year before he died, there was a celebration, I guess the 40th anniversary of his run for president, 2012. And I had taken that poster and had put it on the wall of my office in the House of Representatives, along with another poster I had, which is somewhat better known if you talk to people. It was a picture of me taken in 1974, making a speech, and I looked kind of disheveled. And the headline of that one was, "Neatness isn't everything. Vote for Frank." But I had the McGovern poster, and I was invited to this reception for him, and I posed for a picture that was in the Washington Post of me and him and the poster. That was a great moment for me.
Great. Yeah, it's interesting. That it reminds me of one of my mom's phrases. My mom somehow managed to raise 13 children, and she likes to frequently say to me, "The train is on time." So, yeah, I caught a bunch of different trains, but yeah, I think they were on time for the good of the country. So, so you're this champion of civil rights, and you ultimately become chair of the House Financial Services Committee. How did that happen?
Well, let me be very clear. It was a very important committee, and I was chairman at one of the most important times in the country's history. And it was one of the, but when I was chair of the Financial Services Committee, it was probably one of the 5 most important jobs in the federal government. If you read the memoirs of Ben Bernanke that just came out, or Hank Paulson, who was Bush's Secretary of Treasury, they're very nice to me and talk a lot about what I did. So here's how I became chairman of the committee. It had to do with my skill, my ability to get along with others, my charm, and the fact that one guy died and another guy ran for the Senate, and a third guy got redistricted because it was entirely on seniority. There was a great quote from Lord Melbourne, British aristocrat in the 19th century, who was not a big fan of democratization. And he once said of the Order of the Garter, the thing I like about the Order of the Garter is that there's no damn nonsense about merit when they give it out. And that's true of committee chairmanships.
But look, I sat in many of those hearings. I mean, you really knew the substance. I mean, I saw you many times explaining corporate finance principles to your colleagues on the panel. Where did
well, that was important. By the way, I thank you for that. It was important to do that in a way that was not condescending.
Right. And
here's the deal. I didn't choose for that. I got on the committee. It was called the Banking Committee then, mainly because of my interest in housing. And one of my long interests has been in affordable rental housing. I think that is a neglected thing by liberals. When you talk about education, we blame teachers because they can't do a good job with kids who live in terrible housing conditions, can't get a good night's sleep, don't have a place to study, it's noisy, maybe they're bitten by rats. Health is also subverted by bad housing conditions. So from the beginning, I was working on affordable rental housing, and I've also been a skeptic of home ownership. I don't think you do low-income people a great service by pushing that on them, especially if you have the alternative of decent affordable rental housing. And that was my major focus. I picked up another, and I worked a lot to try and get the World Bank and the International Monetary Fund to be less anti-social policy. The World Bank had a publication called the Doing Business Report. And in that report, a country got points if it really was bad to workers. It got points if there weren't vacations, didn't have unions. We got that, finally got that knocked out. It took me 15 years. The IMF, under the Clinton administration, reacted to the Asian crisis of the 90s as if it was a problem of overspending, and it was not that at all. In fact, part of the problem was partly because of mistaken excessive free enterprise emphasis that we had pushed. Countries were not allowed to do anything about controlling the outflow of capital, so that what you had was an inflow of very short-term capital and then an outflow, causing a great run on these countries. And so instead, the IMF imposes austerity, which not only made it worse, but got people to think, hey, democracy means we don't get enough to eat. And I spent a lot of time fighting that. I'm very proud I got the World Bank to establish inspection panels from the environmental standpoint. I had not paid much attention to financial stuff. I mean, frankly, my response to that was, there was a fight between the securities industry and the banks and the insurance industries, and I stayed off those subcommittees. I worked with the Massachusetts banks. That was a constituency issue. And there were some problems. Massachusetts is older than America. So are Massachusetts banking laws. So there were banking laws in Massachusetts that conflicted with federal banking laws, and the Massachusetts banks would sometimes be caught in the middle, and I would have to intermediate that to generally successfully. But I didn't pay any attention to the financial manipulation. And my answer was, I didn't come down here to referee fights between rich people. Let them all fight with each other. But you have institutional roles. I now find myself as the senior Democrat first in 2003 on the committee because of seniority, and then later in 2007 as the chairman. And you cannot escape your responsibility. Now, when I first took over, I thought, if I ever get to be chairman, I will really be able to do a lot for affordable housing and other things. But then I become chairman in 2007, along with the financial crisis. And it's a too grandiose an analogy, but the principle, the logic is the same. Both Woodrow Wilson and Lyndon Johnson found their plans for greater social transformation, more domestic liberalism, derailed by wars. By Vietnam for Lyndon, obviously, for World War I for Wilson. So what I found myself was, by necessity, having to deal with this stuff. And then, you gotta learn it. Yeah. So that was, and in fact, one of the advantages when I retired was, I would sing in my head, because I have a terrible voice, an old anti-war song with my adapted lyrics, ain't gonna study derivatives no more.
Yeah, that's great.
My husband, who went through this, we started dating just as I was senior member and our relationship really blossomed just when I became chairman. And he claims to be the only surfer, he's a very ardent surfer, the only surfer that he's met who really understands credit default swaps.
Can I follow up?
Yeah,
Okay,
sure.
so to follow up on your interest in housing, you mentioned rental housing as a priority, but generally the housing market remains the disaster area of the post-financial crisis where other markets have more or less recovered. Housing is still in limbo. That's largely a matter of unfinished policy. Fannie and Freddie is in government hands. So if you were the king of what happens next in federal housing policy, how would you propose going forward on Fannie, Freddie, on getting
Well,
these
I agree.
programs?
First of all, and I continue, and even with Fannie and Freddie, my major push on them was to have them do more multifamily housing. And in fact, even as things were collapsing, the multifamily housing portfolio made money. The multifamily housing portfolio was never in trouble because you had responsible borrowers there. Secondly, I guess I would differ a little bit about the state of the housing market. There is a problem with, say, rents going too high, but housing is back. It's not holding back the economy the way it was. And Fannie and Freddie actually, they're very different than they were before. And they are, along with the FHA, financing a large amount of housing. The biggest thing we did to fix things was in the financial reform bill. And I'll explain this once. I don't refer to it as the Dodd-Frank Act because in my experience, anybody who refers to himself in the third person sounds like a pompous twit. The only person I have ever seen be able to pull that off with some real gravitas was Charles de Gaulle. He could call himself de Gaulle, and everybody said, yeah. But we outlawed the bad loans. You just cannot make them. They're not enforceable. But even with that, yes, I do think we should. And the best news I've gotten since I got, one of the things we put into the Housing and Economic Reform Act, Recovery Act, the HERA, was the creation of a trust fund for affordable housing. One of the great disparities in American public policy is that we have the home mortgage interest deduction, which is a terrible idea. And if I was starting a society again,
it costs a lot of money. It's about $100 billion a year.
If I was starting, and it goes, it helps wealthier people.
Right.
If I was starting a country, I would get rid of it. The problem is that the value of that is so deeply embedded in the value of everybody's home, and homes are such a major asset that it's politically impossible to get rid of it. I work with the Low Income Housing Coalition. They said, let's take some of that money and from the home mortgage interest deduction and put it into affordable rental housing for low income people. My response was, no, that politically we can't do that directly. We can do it indirectly. You can't take it away. One of the most important political principles is this. It is much easier to deny people something in the first place than to take it away from them once they've had it. Oh, yeah. And if you have kids, that's the same principle. You don't buy them the toy in the first place. It's a lot easier and less trying than if you try and take it away. Right. So what we figured out was a way to divert money from home ownership into affordable rental housing before it reached any individual's hands. And we created in that bill, which regulated Fannie and Freddie, a low-income housing trust fund so that a certain percentage of the money that Fannie and Freddie were making as profit would go into this affordable housing trust fund. Then, of course, Fannie and Freddie weren't making any money. Now that they are making money again, the director of the agency that oversees it, the Federal Housing Finance Agency, Mel Watt, a great guy from North Carolina, promulgated that rule. So there is now a flow. It's going to be a couple $100 million at first, and it could grow. A couple of basis points of the mortgage insurance goes into that. So that one I was very happy to see. The problem, though, is what do you do? It is not healthy to have Fannie and Freddie doing so much of it. And here's the problem that you've seen. This is a manifestation of it, which is the right-wing influence in the Republican Party. There is a consensus, first of all, that the public-private hybrid model of Fannie and Freddie being publicly controlled but responsible to shareholders was just a conflicted model and was not a good idea. The consensus is Secretary of the Treasury Tim Geithner proposed it. It's got bipartisan support in the Senate. It is to abolish Fannie and Freddie, phasing them out, and to create a federal statute that allows for the creation of private entities that will sell lenders interest rate hedges if they want to do 30-year fixed rate loans. That's the key. If you want to have 30-year fixed rate loans, most countries don't have them, but this is a big part of this American home ownership thing. No one's going to make a 30-year fixed rate loan at anything less than 20% interest without some interest rate hedge. You're not going to lend somebody at 5, 6, 7% for 20 years. So this is to sell people a hedge, not against credit risk, but against interest rate risk. And we have a commitment of people that similarly, a couple of points of that would go to keep the Affordable Housing Trust Fund. That's generally agreed to by everybody except the Republicans who run the House Financial Services Committee. The House Financial Services Committee is in the hands of the most fundamentalist Republicans. They were the ones who tried to kill the Export-Import Bank, who tried to kill terrorism risk insurance. Terrorism risk insurance was a program we started after 9/11 because insurance companies started to say to people who wanted to build very big buildings in New York and Chicago and elsewhere, we cannot insure you against a terrorist attack. Whereupon the bank said, we can't lend you money if you're not insured. And this was a clear case of market failure. It's not the market's business to protect the country against terrorism. So we created a terrorism risk insurance program so that banks could then get back in the business. They're against that. At any rate, their view on Fannie and Freddie is that they should just be flat out abolished, and there should be they don't want any mechanism to try and provide any kind of an interest rate hedge. And they are a minority, but they have kept that from going to the floor. And as long as they control the committee, that's where we are. So the other reason why you haven't moved is Fannie and Freddie are now making money for the federal government, and they're helping support the housing market. So at this point, the argument is more kind of theoretical.
No, and it is a big challenge, but it requires legislative action, though. So the charters of Fannie and Freddie can't change under current law.
No.
So we can maintain the status quo indefinitely, but the future is going to require some form of legislative action.
Well, it should, but let me quote Herb Stein, Nixon's Council of Economic Advisor chairman. If something cannot continue, it will stop. That was Herb Stein's. That was Herb Stein's very common. Yeah, I mean that's.
I think our physics students here, would agree with that.
Well, just to throw out one more question, we'll open it up sooner. Doug might have more questions. I feel bad about this because you just said that you were done with derivatives and all that, but just looking back at Dodd-Frank, and I know you've been talking about it recently because of the big anniversary, I'm curious, what in that act are you proudest of or happiest about, and what do you feel is the biggest piece of unfinished business, or what would you have done differently?
The biggest piece of unfinished business, again, if I was starting a new country, there would not be a separate Securities and Exchange Commission and Commodities Futures Trading Commission. They have overlapping, intertangled jurisdictions, but the SEC is seen as Wall Street's, and the Commodities Futures Trading Commission is the heartland of America's agency. Remember, the commodities, that just shows how we've evolved in our financial stuff. The Commodities Futures Trading Commission used to deal with commodities in which there were future traded. Exactly. In fact, when we had a question of the jurisdictional split, one proposal I made was that the CFTC would be in charge of everything edible, and the SEC everything else. It would just be a terrible cultural clash. Tim Geithner quotes me in his book saying, he asked me, can we merge them? And I said, sure you could, just not in America. I mean, this cultural conflict would just make it impossible. So then beyond that, what was doable? I made one concession that has turned out to be worse than I thought. I believe the single biggest cause of the crisis was the move to securitization of loans. 50 years ago, if you borrowed money, you had to pay back the person who lent it to you. And that meant that the lender was careful and frisked you pretty good. And then, thanks to liquidity from outside the banking system, from Asian countries with a lot of balance of payment surplus and from oil producers, we got into securitization. But the key for that, by the way, securitization could not have happened without the revolution in information technology. You could not package thousands of loans and sell them to tens of thousands of people without IT. But what happened was by the 80s, it changed. So that by the 90s, certainly by the beginning of this century, the great majority of loans, both in dollar amount and in the number of loans, were being made by people who made the loan and then sold the loan to people who packaged them as securities. So the lender now, the incentive from the lender shifted from worrying about the quality of loans to profiting from the quantity of loans. And that what I wanted to do was to impose risk retention. Basically, if you are the packager of these loans, you take the first 5% of loss. Mm-hmm. And I actually worked with Charlie McGreevy, who was head of the EU on this, and because the banks during this whole thing would try to play us off against each other. Well, if you do that, I'm going to England. Well, I can go to, Brussels. I sold one group. You're like some 12-year-old kid playing off his divorced mother against his divorced father. Your problem is that mommy and daddy are talking, and we spend a lot of time coordinating. So what we had in the bill was there would be two kinds of loans. Loans you could not make because they were very bad. That survived. Mm-hmm. And any other loan, mortgage or other, had to be subject to a 5% risk reduction if you're securitized. And then we needed 60 votes in the Senate. And there's a big difference. You can often get 53, 54 votes. Getting 60 is harder. Senator Mary Landrieu from Louisiana came to Senator Dodd and said, I need an exception for super good loans. That is, loans that are really, really very good, the mortgage brokers or whether, shouldn't be subject to risk retention. The argument which I have found very flawed has been, you can't, if you require risk retention, you won't get many mortgage loans. If people can't 100% securitize their loans, there won't be mortgage loans, which apparently means that there were no mortgage loans made in America before 1970, because we didn't have that before 1970. But at any rate, to get the bill through, to get the 60, Dodd said we got to accommodate it. So we created a category of especially good loans that would then not be subject to risk retention. And then to my great dismay, the Regulatory Council got persuaded by a coalition of liberal advocacy groups and the banks that they should let the loophole eat up the rule. So there is now, ironically, no risk retention for residential mortgages. There is risk retention for everything else, where there was less of a problem. I would not have given in that. I would not have given that up.
Yeah, it's sort of interesting. It's sort of a coalition of the far left and the far
Yep.
right.
My friends on the left did not, and the argument was, we weren't getting enough loans for poor people. It was a terrible mistake, I believe. Fortunately, it was that can be reversed if it starts to be a problem again. And it's true that we did get rid of the worst of the loans, so we'll see what happens. The other areas were kind of minor. One of the things that the Bush administration did when we were trying, contrary to right-wing based liberals, were trying to get rid of the subprime loans. And we tried various ways to do it. In the late 1999, 2000, a number of states passed laws to restrict subprime loans. And the Bush administration then used the federal power of preemption under the National Bank Act. And they promulgated a rule in 2004 that said no state could regulate the lending activities of any nationally chartered bank. And the man who promulgated it, the control of the currency, who was a Clinton holdover, Jerry Hawk, they had a staggered term, he then sent out a DVD to all of the state chartered banks and said, by the way, if you switch your charter to me, I not only get the fee, but you'll escape state regulation. We mostly overturned that, but not enough. I would have overturned that a little further. What I'm proudest of, one, banning the bad subprime loans, at least putting in place the securitization, the risk retention, and the without question, the star of it is the Consumer Financial Protection Bureau, which has worked very well. And you will notice that there are no horror stories. It's because they have been very, very careful. And Elizabeth Warren actually deserves a lot of credit for helping set that up administratively. Her opponents blocked her from being confirmed in the Senate, so Obama wouldn't appoint her. And so they wound up making her a senator and a star, so that didn't work so good for them.
Yeah. They seem to be keeping kind of a bit of a low profile. You don't hear a lot about them, but...
About the CFPB?
Yeah.
Yeah, well, they're making some real gains. If you read... well, actually, there was one other thing that was regretted. The auto dealers, who are very popular, there's this myth that the big banks have all this political influence. They don't have much political influence. Nobody likes them. And they're concentrated in small districts. The people with influence are the people who are in natural grassroots networks, i.e. people who are economically active in everybody's district.
Right.
The realtors, the insurance agents, and the auto dealers. Everybody loves the auto dealers. Hi, come on down. They're making all these jokey ads, and they're at the Kiwanis, and they sponsor the Little League. And they did one other thing that was very smart. I mean, I don't think they did it for this reason. Good things paid off. It turns out that the auto dealers, I may have vaguely known this, but I learned it, have a better record than most American businesses in franchising minorities. Maybe it's because buying cars is one of the things that has some prominence in the African-American community. But on almost all of the issues, the African-American members of the committee, and it was a large African-American population because we had housing as part of our jurisdiction, voted for tough regulation. The one issue on which I lost about half of the African Americans was on a proposal to give the auto dealers an exemption from the Consumer Bureau, because they had African American auto dealers in the districts calling up and saying, geez, these people, they're the only ones who put us in business. You know, you got to give me this vote. So I would have gotten rid of that. The other thing, though, I think the derivative regulation has also worked very well. I claim as a trophy the decision by General Electric to go back to its roots. General Electric started making physical appliances and machinery. And then under Jack Welch, touted as a great wizard, they got into the financial
Who was here a couple months ago, sitting right here. But.
He got them into the financial razzle-dazzle business. And they got into trouble over that, as did others. And in a decision that they attribute very specifically to the legislation and the new rules and the toughness, GE has now divested itself of the financial aspect, and is going back to being a manufacturer of real things, because we took too much of the profit out of the manipulation.
Let's open it up.
Yeah. Do you guys want to start queuing up for questions?
So we have some people with microphones.
We can probably repeat it if someone says it loud enough.
Yeah.
Well, Congressman Franks, thank you very much for this exciting discussion. I would like to bring your topic regarding IMF. You mentioned in your speech, what should be the standing of the United States towards the reforms of IMF and increasing, for example, voting rights of emerging economies? That's one thing. And the second thing, what is your standing regarding Asian Infrastructure and Investment Bank and the position, again, of the United States towards this institution? Thank you.
I, first of all, am happy with the evolution of the IMF. The IMF today under Madame Lagarde is a much less repressive economic institution than it was under her predecessors. Although I think Dominique Strauss-Kahn was moving the IMF in the right direction. He was unfortunately moving himself in the wrong direction, which kind of undercut things. So I am very proud. The IMF, you had what in the 90s, and the Clinton administration was under this. It was the Washington Consensus. And you had the irony of the Clinton administration being liberal at home, but being very Reaganite abroad, that the solution was always cut spending, make life harder for poor people. They have gotten away from that. And I think, so substantively, they've gotten much better. Similarly, because you mentioned the Infrastructure Bank, which really does more of the World Bank's role than the IMF, one of the things I did, I was chairman for 2 years of the subcommittee before the Republicans took over that had to approve the financing for America's share for the World Bank. And working with the environmental groups, I told the World Bank that we wouldn't give them the money unless they created inspection panels, which have worked out very well, whereby people from the local countries who were objecting to various projects could bring this to a neutral body. Actually, the World Bank told me, it's a good way about how politics works, there's a very important principle when you're legislating, it's from an old spiritual, The ankle bone is connected to the shoulder bone. It's the story of the bones. The ankle bone's connected to the shin bone and all the way up. Here's the deal. I told the World Bank that I would not approve the American tranche that they were looking for if they didn't set up the inspection panels and also be very transparent with information. They said, you have no power to do that. And it's true. Under the law, no individual country can make policy. I said, that's right. I cannot make you do that. By the way, you cannot make me vote you the money. That's the connection. We have two independent decisions to make. You have no power to compel Congress to vote you the money. Congress has no power to compel you to create the inspection panels. So there are two options. Either we each accommodate the other or we each screw the other. So you tell me which it is. So we have the inspection panels which have worked well. On the IMF, now to get you the important part of your question, yeah, it clearly is sensible for us. It's right to broaden the membership and to allow, I mean, part of it is like, you know, we have this dumb idea in America that we should have all the power and in return, we spend all the money. I'm ready to share power and the spending. So, but here's the problem. It is the right-wing Republicans who are blocking that. If you ask me what the issue is, most Americans would like, most policymakers want to adopt the reforms of the IMF, which include giving more voting power to others, giving up an American veto. But the right-wing Republicans, they are against the IMF and the World Bank totally. In fact, during the crisis, in the immediate aftermath of the American crisis, we had the Eurozone crisis. And one of the good things that happened was the Federal Reserve, which I think has performed superbly in the last few years, the Federal Reserve was doing currency swaps with the Eurozone to provide liquidity to them. The Republicans in the Senate actually got an amendment passed to the financial reform bill that would have blocked the IMF from helping Europe. And we got rid of that. So what you have is blind ideological opposition, which is preventing us from ratifying those reforms, which is a terrible mistake. As to China's infrastructure bank, this is a mistaken view of the United States, which is that somehow it's against our interests to share the burden of helping other people. I mean, I don't know why we regard this as a zero-sum game. People get upset because China is investing in Africa. I think the Chinese government is a very repressive one. It's gotten worse under Xi. I regret that. But I don't understand why it is a bad thing if they decide to lend money to Africa, from our standpoint, instead of us. And I think this is, I think, a silly knee-jerk reaction that anything that improves what China gets, you know, is good. I mean, I guess we have to make a distinction between China creating an infrastructure bank which lends money to people and bullying the Philippines and the other Southeast Asian countries over their islands. No, we should not be supporting that. But if they want to lend people money, why, I don't understand why that's wrong for us. And I think this is one of the few strategic mistakes I think is being made by the Obama administration. And, you know, when we can't even hold England to a decision of this sort, probably we ought to reconsider it.
I think we have time for one or two more questions. Maybe we go for this side of the room.
Thank you, Congressman. I just wanted to talk about the notion of companies being too big to fail. Not only apply to banks, but also, you know, big conglomerates or industrial companies that are increasing their market power and kind of lessening competition. And what are the kind of levers that you've seen being pulled or used to kind of counteract that?
Well, I agree that there is a problem of companies being too big in the non-financial industry area, but there is this distinction. Nobody thinks they're too big to fail. They could fail, but they don't have the knock-on effects. The specific problem with financial institutions is their interconnectedness. So that when Lehman Brothers stopped paying its debts, it caused that chain reaction. And that's what we are dealing with. So now with regard to non-financial companies, yeah, I think there is a problem of monopoly power, et cetera, but their failure does not have the systemic reverberations that happens when you have the concentration of financial activity. I believe we've resolved that, and I think I can prove that by the evidence. What we said, by the way, in the bill was I think it would be a great mistake to try to reduce the size of financial companies so that none of them were too big to fail, which means that none of them were so big that their inability to pay their debts would not cause systemic effects. You would have to get them very small. Lehman Brothers was not very big. So if the notion is you're going to break up financial institutions so none of them are so big that their failure to pay debts would cause a problem, it would be destabilizing, impossible. What we said instead was this: you are not too big to fail. There are some institutions, there are no institutions now in America that are too big to fail. There are institutions that are too big for us to let them fail without taking some remedial action. Now, here's how it works. If a large institution comes to the federal government and says, I can't pay my debts, the first thing that happens is they are dissolved. They are put into federal control. They are actually, I said dissolved, in one of the great semantic tricks, they are resolved. When we blow up a bank, we call it resolving a bank. But that means you shoot everybody. What happens is the federal government takes over the institution. Everybody's fired. The board's fired. The executives are fired. Any money that can be marshaled from their assets then is put into a pot, including any shareholder equity, all gone. Bondholders. It goes into a pot to pay off the debts. If that is not enough to pay off all the debts, as it probably would not be, the Secretary of the Treasury is then mandated by statute to pay only as much of the debt as is necessary to prevent things from going out of control. And this was the problem. The Bush administration came to us in 2007 and 2008, Bernanke and Paulson, and said, here's our problem. If a big financial institution goes out, we have two choices. We can pay none of the debts or all of the debts. We can't use the bankruptcy principle of sort of paying part of them. And of course, that's what happened. Lehman went out of business. They paid none of the debts. That got everybody so scared that when AIG went under, they paid all the debts. So the Secretary of the Treasury is now explicitly empowered to pay only as much of the debt that the institution's assets can't cover as to prevent a crisis. And he is also mandated by law then to recover any expenditure from an assessment on financial institutions that have $50 billion or more in assets. Now, people have said, the Republicans have said, oh, you've given them a big white kiss. Saying that they are systemically important, which means they're under this, is a great embrace. It gives people this comfort that they can lend them money or invest and be repaid. In fact, the overwhelming response of the institutions is that being designated as systemically important is a terrible thing to happen to you. And here's the proof. Some institutions are automatically covered. Goldman Sachs, Wells Fargo, Bank of America, et cetera. But there is a gray area of some institutions like insurance companies. Are they to be covered or not? Mutual funds. Every company that is being considered where there is discretion to be covered as a systemically important financial institution is fighting like hell against it, because with it comes much increased regulation and higher capital standards. And one of the major issues going on in America today is if banks that are in the $30 and $40 billion asset range, because the law sets a $50 billion cutoff, and it was arbitrary, we should have had more flexibility. But there is a major push right now to raise that to $100 billion, because banks that are now in the 30 and 40 range and are approaching the 50 are in a panic because of all the extra costs it's going to be, capital and regulation. The share price has somewhat eroded. People made a big deal because AIG sort of volunteered to be covered. Having been covered, AIG is now planning to divest enough of its subordinate pieces so it will no longer be covered. GE, in getting rid of its financial wing, specifically cited that they did not want to be a SIFI anymore. By the way, it's called the SIFI, Systemically Important Financial Institutions. By the normal words of English, rules of English pronunciation, if it's a single consonant, the vowel is long. If it's a double consonant, the vowel is short. So SIFI should be pronounced sci-fi, but that was taken. So that's why it's called the SIFI. I mean, that's the effect. But so I think we have done that.
First person to ask a question back there. Do you still have one?
Yeah. Thank you, Congressman Frank. I just wonder what can be done to encourage top university graduates to move into public service as opposed to taking jobs in the private sector.
don't know exactly. One thing we could do, we could pay people more. The federal government underpays. One of the reasons we gave some powers to the Federal Reserve as opposed to some of the other bank regulators, and one of the reasons I supported that is that the Federal Reserve System is outside of the regular federal pay scale. So the Federal Reserve is able to pay more. Look, no one who is going to go in the public sector and make as much money, but I think we've allowed that to be a minimum below which they can't get. So we're hiring people to compete with people in the private sector. So that would be one thing I would do. The other, it would be, and it's a cultural thing, for people to stop mocking government, for people to stop acting as if everything government does is wrong. And I'll give you, we have two forms of voter suppression in America. We have right-wing voter suppression, where they change the law to make it physically harder for people to vote. But we have left-wing voter suppression. People who tell young people in particular that the whole system is corrupt, that big money dominates everything, that there's no point in trying. Yeah, I wish we didn't have money as much as we did, but that's totally a distortion. It's a self-fulfilling prophecy. So people could start pointing out some of the useful things that government has done. I wish there was more talk about the Consumer Financial Protection Bureau. And the left-wing suppression, I'll give you an example of it, Jon Stewart. Jon Stewart is very funny, but nothing good ever happened on his show. Night after night, it was government is full of incompetence, crooks, liars. Why would you want to go to work for these people? I understand that may be funnier than success. When I wrote a book, and I started out in the book by talking about lead. 50 years ago, there was lead in the paint that went on the walls and lead in the gasoline. And the result was a serious epidemic of brain damage among particularly poor children. And then Congress and the president, including Richard Nixon, banned lead from paint and banned lead from gasoline. And the two industries said this will be terrible, this will wreck our industry. Today, those industries are thriving, and the incidence of brain damage in children is down by over 90%. We need to talk more about this. So, one, pay people more, but this cultural denigration of government, I think, is part of the problem.
Yeah, the term good enough for government work actually used to be a point of pride, not derision.
Yeah.
So.
Great. Well, good. Well, please join me in thanking